In today's video, we're going to discuss how to retire now with Yieldmax funds while boosting your performance with these blue chip stocks that I've identified on my trip to Maine. We just got back from Maine. We were there for 2 weeks, living the fire lifestyle, which means financially independent, retire early. We earn over $300,000 per year in dividends, as you can see here, which Yieldmax helps us earn. Yieldmax, Cornerstone, and Defiance, and it helps us travel the world, do whatever we want. I can buy whatever I want and then pay for whatever I buy on my trips with my dividends. We're outperforming the market, as you can see below. We're up 21%. The S&P is up 14, the Nasdaq's up 17, the Dow's up 3, and the Russell's down 0.25. So we're beating all of the indexes with Yieldmax, Cornerstone, and Defiance. We're still up 21%. Even with the market pulling back recently, we've stayed up and we're up 21%. That's because we've been adding these blue chip names to the mix. So we're living financially free with Yieldmax, Cornerstone, and Defiance. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. And now we're also boosting our performance with these blue chip stocks. I have one blue chip stock for you today in particular. I'm doing a series on these blue chip stocks that I've identified in Maine. I was going through the S&P. I'm looking for the most beaten down stocks, and I'm trying to get not only more dividends, but more performance to offset the quote unquote erosion that we see from Yieldmax, Cornerstone, and Defiance. So I'm going to get into that with you now. So yes, for every $1 you put in your account, if you're new to this channel, you get $4 of purchasing power. I'm just using a fraction of my margin purchasing power to get ahead. Everyone has this power granted to them in their brokerage account. You can see that I have about $225,000 on of margin debt. Really, I have about $275,000 of leverage on, but I sell these puts up here and they knock down my margin significantly. I mean, even this BitX put that I sold recently, everyone knows that I've been selling puts on Bitcoin. Well, this gave us $25,000 in premiums roughly, so that knocked down my margin alone by $25,000 just by selling puts on Bitcoin. If you need help selling options, that's in my volume 6 e-guide. So our margin leverage is around $275,000 or so, but you're only seeing $225,000 because of these sold puts. I don't mind the interest anyway on my margin. I've negotiated my margin interest down twice. Many of my clients who bought my e-guides did the same thing. Whenever you call me and you want to negotiate your rates down, I have the script ready, so I'll just send you that script via text message. So we don't even have to go over that anymore on our phone calls. We can just focus on how I sell these puts or how I get the lowest maintenance possible. As you can see here, Yieldmax is 50% maintenance. So this is a killer to the fire lifestyle. We want the lowest maintenance possible. That's why I'm going into these blue chip names, because they have lower maintenance. Yieldmax is 50% maintenance, but let's say an ExxonMobil, which is not the stock that I'm talking about today. Although Exxon is very cheap and it has 3.5% dividend, it's 30% maintenance, and that's how we live the fire lifestyle and keep our available withdrawals so high, which allows us to travel the world and live financially free. If you need help understanding maintenance, that's in my volume 3 e-guide. So Yieldmax is 50% maintenance. We all know this. And the stocks that I'm buying, these blue chip names that I'm adding to the mix to offset erosion from Yieldmax, Cornerstone, and Defiance, are 30% maintenance. And that's how we preserve, again, all of our equity. This way I can travel and do whatever I want. I can withdraw out of my account and still withstand over 30% corrections in the market. If you take my net account value of, let's say, $800,000 and my debt of around $200,000, that's around $1 million invested. So if we have a 10% correction, 10% on $1 million is $100,000. So 20% would be $200,000. 30% would be $300,000. So we can withstand over 30% corrections in the market and still withdraw freely out of our accounts. This is how you live the fire lifestyle. I can swipe my E-Trade card and go wherever I want. I can still add to this debt here. And then even though I'm in debt, I can withdraw from my account, and my available withdrawal will barely budge. If I take out $1,000 to go buy some sushi or some oysters like I was eating in Maine, the oysters there are to die for. I would tell you more about them, but I don't have enough time in this video. Well, it didn't even hurt me because our available withdrawal is so high. If I withdraw $1,000, now I'm down to $304,000 versus $305,000. So this is nothing. And then my dividends at the end of the month just pay all that back and bring all my equity back in. We earn about $25,000 a month in dividends. So this available withdrawal will go up by $25,000 by the end of the month. I can't even spend all the dividends that I earn. So the stock that I have for you all today is Northrop Grumman. We're going to fly to the moon with Northrop Grumman because this does satellites. It's a defensive name. It's an industrial in the S&P, but it's also a defensive name. It's a military defense name. It has 30% maintenance, and it has a almost 2% dividend. So this stock is cheap. If you go to it on its chart, you'll see that NOC is looking very attractive on its chart. Here it is on its chart. As you can see, it's at the yearly lows. And if you zoom in on the large chart, you'll see that it's on the 50-day moving average on a 10-year chart. This is significant. So I'm starting a position here on the 50-day moving average. And this is typically when you buy stocks. You buy them on the key moving averages on a max time frame. On a 1-year time frame, you can see it's at October lows. So this is looking really cheap. The MACD is about to cross upward and the RSI is oversold. If you need help understanding charts, that's in my volume 2 e-guide. So here we go. It looks cheap on a 1-year chart, and on a max time frame, it's on the 50-day moving average. So this is a textbook buy. We need more industrial exposure. You need all the 10 sectors of the S&P to stay fully diversified and offset erosion from Yieldmax. So Northrop Grumman, this is an easy buy. They do missile defense systems mainly, and they do satellites for the race to space. So if you are interested in that growth theme of space exploration and the race to space with other countries that are trying to compete to get all their satellites in the air, well, Northrop Grumman is a perfect candidate for that. So Boeing, we already own Boeing. It does some space defense systems, and Boeing is a large part of the Dow Jones Industrial Index, but Northrop Grumman is another defensive play. We need more industrials to get more diversification. Obviously, we put most of our money in the indexes themselves, okay? Most of my money is in Cornerstone. I have over 400 grand parked in Cornerstone because it's a 4-star fund. It goes upward, left to right on its chart. But if you go to a chart on E-Trade, you'll see that Cornerstone goes sideways to down. So you have to factor back in dividends and drips. Cornerstone drips its dividend down at the bottom for free money every month. So if you own Cornerstone up here, if you're new to this channel, it drips the dividends down here where my mouse is, again, for free money every month. This is how we really level up. This is how we get ahead. Cornerstone was up on Friday, as you can see, 0.66 when the market was down. As you can see, we're at 0.23 on Friday. And if you look above, the NASDAQ was down 0.18, the S&P was down 0.16, but the Dow was up 0.04. So I'm seeing this theme of tech being down and industrials and other sectors catching up. So I want to buy Northrop Grumman, not only for the cheapness on its chart, not only for the diversification, but it also gives us these days gains because Cornerstone gives us most of our days gains. And by the way, if you need help playing Cornerstone, that's in my volume 4 e-guide. Please time this fund around its rights offering. I always get the question, what's wrong with Cornerstone? It goes sideways to down. Yeah, factor back in dividends and drips and the rights offerings. When you buy my e-guides, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. We have over 1,000 members here in this Discord chat room pursuing the FIRE lifestyle. This is the best Discord chat room in the world when it comes to finance, in my opinion, and most of my members will say the same thing. So we alert you of the Cornerstone rights offering announcement here on Discord, and that's again how we level up our account, because with Cornerstone, again, you time it around its rights offerings, because you can take the 20 to 30% premiums that they average per year plus the 21% dividend that it averages every year. So you can get upwards of 40 to 50% gains in Cornerstone plus the special drip, but then you have to time it around its rights offerings. You sell before the rights offering and you buy back after. That's how you really level up your account once again. So that's how I'm getting ahead on down days in the market. It's with Cornerstone, as you can see, and then these other blue chip names that I've added to the portfolio. And once again, I'm going to be covering all of them. We're going to be doing a series on these blue chip names that I think are at good buy points on their charts, and they also have really good fundamentals. Northrop Grumman, for example, great fundamentals. It's an S&P 500 name, but it also has some catalysts for it, okay? It has the race to space theme, the satellite theme, but the Minuteman III system I've read about. This is called the Minuteman III defense system. I think Northrop Grumman is down on its chart right now because that system launch was delayed. But once that is finally resumed again and the program for their missile defense system is resumed, it's going to add a lot of reoccurring revenue for many years to come. So that's a big tailwind that you're going to see with Northrop Grumman with their Minuteman III system. Go read about that if you want. I read about it on Seeking Alpha. That's where I get a lot of my information. I'm really thankful for Seeking Alpha. But anyway, Northrop Grumman has catalysts for growth. It's cheap on its chart. It adds diversification and it offsets erosion from Yieldmax. And it's also, by the way, again, 30% maintenance. If you need help understanding maintenance, that's in my volume 3 e-guide. So I would have sold a put on Northrop Grumman, but its 432 strike price is just way too much to sell puts on. Obviously, I like to sell puts on low share price names, so I'm not going to be selling options on Northrop Grumman, but for adding Northrop Grumman to the mix, I'm only adding a couple thousand because I keep all of my stocks small, as you know, and I keep most of my money in Cornerstone, as I already laid out. You have to put all your money in the indexes so that you get the compounding of the indexes, because you can put a lot more money in an index if you put 400,000 in Cornerstone, a 10% gain means you get 40,000. Whereas if you have 40,000 in a stock, you have to get 100% gain to get 40,000. So compounding really helps us get ahead with Cornerstone. I can put all my money in the indexes and sleep at night and not worry about headline risk. Northrop Grumman might have its own headline risk. It could have a delay with its missile defense system, with the Minuteman III system that I was telling you about. Who knows what can happen with stocks? So you have to keep small amounts in stocks and larger amounts in the indexes. So I put a lot of money in Yieldmax, YMAG and YMAX in particular, because they're the indexes roughly. They're not completely diversified like Defiance is, but they have more diversification than the stocks themselves. So I put most of my money into Yieldmax and YieldMag once again, but they're 50% main, so you can't put too much in them. Plus, they're pretty much tech related. Northrop Grumman gives us that industrial exposure that Yieldmax can't have. Okay, Yieldmax can't sell options on industrials because the volatility isn't high enough. So we have to have a total approach when trying to live the FIRE lifestyle. Again, FIRE stands for financially independent, retire early, and we're trying to just live free from 9 to 5, and you need low maintenance to do this. Northrop Grumman is low maintenance, and you need diversification with the indexes in order to sleep at night and outperform the markets. You also need to stick with Cornerstone, in my opinion, because it's fully diversified. Yieldmag and Yieldmax are not. They were down on Friday, whereas Cornerstone and my other blue chips were up. Many of the industrials, staples, healthcare, energy names were up on Friday once again, whereas Yieldmax stocks were down because they're tech related, basically. So if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life. If you ever have questions, I'm here for you, so just keep that in mind. Also, if you like my video, click like or subscribe, and I'll talk to you soon, everyone. By the way, don't forget, we're going to be doing a multi-part series on these blue chip dividend funds, so look out for those, and I'll talk to you soon, everyone. Thanks.